Morning, guys. Yeah, not a lot going on overseas. Europe, Hong Kong, Australia, China are essentially closed. But we have got a very powerful rally that's been going on really for the last 5 or 6 days. Growth has reasserted itself. We got a new high in the S&P, new high in the transports, new high in the industrials, and many sectors of the S&P also at new highs. Just take a look at some of the ones that are moving. But REITs, new highs, communication services, industrials at a new high, materials at a new high, even financials. Bank stocks, not quite a new high, but the financials as a sector have popped to a new high as well. We've also got an interesting mix of new highs in the S&P 500. There's a very small group of tech stocks like Alphabet and some of the chip names like Lam Research at new highs. Home Depot, curiously, continues to hit new highs. A lot of people talking about that over the weekend. But what is really noticeable is the old school industrials, your Textron, your Norfolk Southerns, Eaton. These are big global industrial names that are continuing to hit new highs every day. And, of course, that's important. There's the great reflation trade that we've been talking about so much. As for growth, ARC Holdings back again. We know about how difficult it was the last week and a half or so. But since then, most of Cathie Wood's big names have been back up there. Tesla's having a good day, of course, on new orders. But Zoom, Zillow, Spotify, Shopify, all have had a much better situation than they were 2 weeks ago. Some of these names were 20, 30, 40% off their old highs, but they've reasserted themselves, not in any dramatic way, but certainly well above where they were the last week and a half. In terms of the tailwinds, a lot of them that are out there right now. I think important just to know where we are in terms of the overall markets right now. U.S. is the vaccine leader, and that's just the most important thing in the world right now. We've got that great jobs report. And remember, the consumer confidence number was off the charts good last week as well. Rates are higher, but they're still contained. And I think that's the key to why so much of the market, we're getting so much of the growth being able to tolerate the higher rates. 2021 earnings, I keep saying the numbers still keep going up week after week, very quietly, maybe not dramatically, but just look at the first quarter. For January 1st, we were expecting it to be up 16% for the first quarter. Now it's up in the mid-20s. For estimates for the first quarter growth. Put up the next full screen. You'll see that's what really moves the markets here. And for the second quarter, the numbers also keep going up. We were expected to be up 45% for the second quarter on January 1st. Now we're up almost 54%. Those are huge moves up, and that's what's powering the market. You want to keep an eye on the second half of the year, of course, to see if that trend continues. The other thing that's amazing, the collapse of the VIX. Did you see this on Thursday? We dropped 2 points going into the close. We were at 19. Now we're at 17. This is back to February 2020 levels. Really rather remarkable. And I think it indicates not only just less concern or overall panic, but perhaps even a little less trading volumes. I think David touched on this earlier. We had some numbers out over the weekend for March trading volumes. Very interesting. Remember, the crescendo was in January when we saw 15 billion shares a day trade in the equity markets. That's remarkable. We had 10 billion on average in 2019. Those numbers for February were a little lower than January. And now we have the March numbers, cash equity volumes, 13% below the February numbers, and equity contracts for options, which indicates, of course, a lot of interest in retail, also 13% below what the numbers were in February. So this makes a little bit of sense, Carl. We had a crescendo in January of trading activity around retail traders, and as people go back to work, the volume levels are coming down a little bit. I don't think that's surprising at all. Carl, back to you.
All right, Bob. Thanks, Bob Pisani.
Shepard Smith here. Thanks for watching CNBC on YouTube.